Damn, usually I'm smoking weed on the intro, but I'm drinking water. All right. How are you guys doing today? Currently it's like Sunday. Uh, it is Sunday. Uh, what? The October 7th. Mm-hmm. Only reason why I mention that is because, um, obviously you can probably see the title of this video and wonder why we're talking about entry hacks part fucking three. So last time that we spoke, okay, um, we talked a lot about ways to frame low risk entries, okay? And like right now, I'm rolling the blunt, and I've been watching like Tampa Pro and a lot of like old like X Games highlights and stuff like that. Um, Now me personally, right? Um, Being a skateboarder, I've said this before in like a few of my older videos, but I mean, me personally, like, um, I feel as though skateboarding gave me like a certain mentality towards like my trading. Okay. And the thing about skating is like it's such an individual activity, yet you do it with other people, right? So you can go skate by yourself, you can skate with other people, but the biggest thing is that nobody can come in and do this shit for you. And I've always loved that about skateboarding. Like the fact that if I wanted to do a trick or learn something, it's up to me to do it. Like no one else could go outside and do that shit for me. And you know what I'm saying? So I felt always the same thing about my trading. Like being able to stay in control of not just like my own personal trading ideas, but being in control and staying creative in the marketplace. And when I say creative in the marketplace, that means that you're able to operate not from just your own perspective, but you're able to actually trade and be in sync with the algo's objective. Being able to understand, not just in your own model or in your own trading plan, but having a relationship between how you actually like to trade and understanding the algo's objective. Okay. And so the reason why I say it like that and I talk about being creative, bro, is like when I meet a lot of people or um, I get a new student, the biggest thing that I'm coming in and I want to learn first is number one, like what is your intention? How do you like to trade? You know what I mean? Because when we go through some of these entry hacks today, it's not just on uh this is not about one certain setup. That's why this video was crazy. It's not just about one setup. And I'll give you some context here, okay? Now, number one, if anybody's been trading NQ, going into NFP here, okay? Now, mind you, when we talk about certain things in the marketplace, right? We talk about time, price, where volatility comes from, when volatility comes, and why. So, like, when we're talking about how to get your entries better in the marketplace and how to avoid all this crazy drawdown that so many people are so comfortable taking before they take a win. And I've already talked on this channel a lot about like time. So like when you're looking for certain kill zones and things like that, obviously with NQ, because in this video, we're looking at NASDAQ and we're also looking at GJ. So like British pound, Japanese yen. Okay. Now there's two reasons why. All right. Now this one, again, talking about narrative first, right before we do the next entry hack, is because now mind you, okay, you can come in and have whatever entry method that you want. The reason why I want you to have a better understanding of breaking down your ins and outs, you're looking to get in right when the move starts. That's the whole point. I'm not telling you to change your entire model, but what I'm telling you to do is have a better understanding of when the candles are up now, the candles are down now, or if you're going for a certain bias, let's say you are bullish, right? For example, you need to come in and say, all right, well, I understand that, I have some interesting context here. I always talk about how important it is when you see like liquidity above or below a session get taken out in order. So knowing that we have right from Asia, we have this consolidation in here. We drop down and we do take out these early lows, right? Create a secondary low. We come down, right? And it's not a 3-pointer because it's not right at 3 o'clock, right? So like it's not a London session trade here that I'd be super interested in unless you get like the small turtle here. But obviously with the small turtle or smaller low being taken here, right? You might get confused and think, okay, well, this is low of the day, the time is good, right? This is my 3 and this is my like 6 a.m., right? Now talk about the kill zone being 2 to 5, but the biggest thing is, hey, are these not equal lows? Right? So yes, I understand that we talk about session style turtle soup a lot. So Asia being taken by London on the downside. And what the hell? Oh, I forgot the blunt was in my hand. Oh, damn. So apparently I'm watching like a mega ramp contest now, and they're like, this is crazy. Tom Shar is a beast. Damn. And so the difference between like, street skating, um, vert skating, mega park skating, right, whatever, and how this relates to what the fuck I'm talking about too. There's different styles of skateboarding, right? Now, me personally, I'm a street skater. I skate ledges, I skate rails, I like flip tricks. I can't skate a fucking vert ramp for my life. I'll tell you that right now. But what I do understand is my skill set and understand what I like to do in my trading as well. I'm intentional. And so, me personally, I love turtle soup. I love order blocks. And obviously, we all like fair value gaps. Some of my favorite ones that we'll do eventually in part 4 is when we talk about entry hacks using the breaker and mitigation block. But for the sake of part 3, we're talking about turtle soup, order blocks, and fair value gaps. And we're basically saying, you know what? If we need to use any of these entry models that are, I would say, my personal 3 favorite, or a lot of others, ICT trader favorites, right? So us having equal lows down here, right? And again, like I said, Trading is just like skateboarding for me. Nobody can do this shit for you, bro. You gotta come in, learn the technique, and be able to run the shit whenever you want. Then you could literally have that much more fun. Skating works the same way. Okay? So here we go. We got relative equal lows, Asia, right? Now, when London and Asia give this equal low, when we get down here on this drop, right? Turtle soup. Yeah, clearly. And so my favorite style of turtle are session turtles from New York underneath Asia and London at what? 9 o'clock in the fucking morning, right? Now, to give you some context also, um, Monday was this is M down. This is too far, too fast, right? Gives an imbalance as well. A, M, and D. Okay. And the distribution being bullish. Okay. Now, mind you, we had a Tuesday low, relative equal lows right in between that. So I'm not expecting this here. Okay. And so I called this out in my Discord where we had this huge imbalance here. Now, mind you, we're going to talk about the top and the bottom of this structure here. And this is what I'm saying about personality, style, creativity, coming in, being different. You don't have to have the same entry method as everybody else, although the same person that might have watched this video, right, has a different model than you. However, you guys are doing something very similar. Okay. So let's talk about the turtle soup first. Then we'll talk about fair value gap. And then we'll go to, um, if we have time, we'll go for the order block. If not, then we'll stick to these two and knock those out in part 4. Okay. Now, mind you, all right, I want you to get understanding of the higher to low time frame. And again, I've said this before. If you're talking about entry hacks, you need to come in with context. Do not be trying to do this in random ass areas. Don't just find 2 bullish candles at a random area with no support or logical reasoning for you to take a trade. I'm not looking to trade Asia session very often if it's not a perfect Judah swing, right? So like hint Judah swing here. That's a nice one. But me personally, I don't trade Mondays anyway, so this wouldn't be interesting to me personally. Now, the biggest thing is we're talking about this Wednesday for a reason, all right? Because there's 2 things I want to show you on a specific day that the entry hack would have helped you with a lot, all right? So us being on the hour, let's go to the 15, all right? Now, let's clean this up a little bit, all right? So we got relative equal lows. We have these beautiful disruptive candles giving us your turtle suit to go long. Now, my bad. Where's the? Well, I found. Okay, I made sure I bought 2 extra lighters just because how many times do I lose the lighter per video, bro? It might be a record. Like, if somebody watched all my videos and literally counted how many times I lost a lighter, and gave an accurate number, I'll give you a free mentorship. Right? So, long story short, okay, is when we're talking about these relative equal lows, I'm giving us the context because the entry hack does not come before context ever. And so we're obviously in an area what I call a, let's do this quickly. Low risk buy area. Okay. Now, why is that a low risk buy area? Is because of the kill zone. Easy and simple. Keeping it kindergarten. Okay. Not overcomplicating this for no reason. All right. And so again, literally, the time window is good. Same way I talk about London all the times, the same way I talk about New York. So 8 to 11, kill zone, right? Perfect. Now, what's significant about these two candles here? That how you look at it, right? We're on a 15-minute chart, and there's 1, 2, 3, 4 candles downward. We understand the draw of liquidity was sell side before your turtle gets started. So, unless your understanding of market structure, right? You really don't want to be like a long-term seller here. And what do I mean? You need to come in and understand objective, right? And this is what I mean. Notice how this offers you a sell here. A plus sell is what I'm talking about. A plus, oh shit, I got tabs on. A plus sell. You also have 830 in general, right? Which is one of our opening prices. Jump into this fair value gap. And I'm just going in order. Okay, like that. You get this perfect piece of price action here. So if you actually ran this, okay, and my guy, one of my students, right, my guy Steve, he killed this trade. Really did a good job. Was like, yo, bro, I saw we were in a 15-minute imbalance. New York was over London, over Asia, so I sold it right inside the kill zone, smacks the target, and he takes profit and gets out. This is one of his greatest, man. And I'm telling you, once you understand the vibe, you can do this. Again, we're talking about the actual entry drill. So right here, right, we're going to do it here and then talk about this one next. Ready? So the reason why I'm going lower to higher time frame, right? I swear it's just dark stouts are the best woods. I swear. So 15-minute time frame. I just want you to take a second and just look at the structure of this. Now, we know when this is, so I'll take this off. All right. It's annoying my eyes. Thank you. All right. So, again, being on the 15-minute, right? You notice how you have a bullish candle. All right. And again, if you're understanding of how you plan a trade intraday, you need to be understanding of the market structure and have some sort of way to navigate what should come next. You're not sitting there just selling, buying, selling, buying, selling, buying. No, it's going to annoy you and your account is going to feel that. What you need to do instead is understand when price gives smaller objectives, meaning this is not the trade to hold all fucking day. No, it's not. Small little imbalance, and you can get offered more than one move inside of an accumulation week, a manipulation week, okay? And especially if you have a day of accumulation, manipulation, whatever, right? You're going to get New York offering you more than one scalp or a scalp before the day's range, or you know what I mean? That's my whole point here. But when we're looking at the actual candles, right? Now, clean this up, right? Do you see the consistency of the candles downward, right? We talked about why. It took the buy side liquidity, came down. It needs to take the sell side before it makes a massive move, right? Now, my whole thing is let's check out this, okay? So we understand the area here is good for us to look for a way in, all right? Now let's pop down to the 5, all right? Okay, okay, all right? Now watch. You see how this consolidation's here? And again, it's perfectly right on time, okay? And we use 8:30, all right? So once you see this consolidation pop in, and we understand that we have targets down here. So we'll just pop in what we call the low-hanging fruit. What's low-hanging fruit? The draw liquidity that is very, very easy. It's right next to you. It's the first one. And this one is like, okay, I might not be able to see too far away from me or ahead of me, but I know that this one is abundant in liquidity. You have these equal lows from London and Asia that you know need to get taken for sure. Asia hardly ever survives. And I say that all the time. And look at it. I mean, realistically, what part of this gets saved? That's what you need to understand why we talk about smaller versus bigger objectives. All this here, 1 and down, 2, back up. These are 2 different trades. That's why we're looking at 1, then 2. So when I show you this on a 5-minute chart, remember, use the time frames. Go down before you look for your root candle, right? There's that word again. You want to come down or basically come down and evaluate. It's not always going to be in the form of just a full consolidation. It's not needing 5 and 6 and 7 candles. Okay, so that's when you get down here. Watch how we interact with this one. But obviously, like I said, the first move of the day is this scalp. If you're able to come in and say, you know what, I understand that algorithmically, when a session high is taken, I need to probably look for sells. Okay. Now, in this area, you notice how we have root candle here. As soon as we go up, right, the liquidity is now taken, and you can see that. So when you get up here, we're already looking for places to give this sort of setup. So when we have our top candle, right, because I said this before, bro, not every candle in the marketplace gets taken out. So when you have this root candle wick, and how are you going to verify that? You're not waiting 10 candles. You're waiting 3 to 5 candles, bro. But what I'm saying is you really want to get in right next to this. So using this as a what? 1 candle stop loss. 5-minute chart. So when this candle starts printing, right, you're going to watch it for a second. You're looking for 2 things, technically 3, but the first 2 are basic. I want you to focus on this first, okay? You're looking for 2 things in this setup here. You're looking for the next 2 to 3 candles to break down without touching the top wick. Now, we talked about that. That's the easy part. Now, watch. What I also need you to look for is speed. Now, between the 1-minute time frame, 2-minute time frame, 3-minute time frame, you could kind of skip the 4. Maybe you want to look at the 4 minutes. Up to you. I don't really look at the 4. I would rather go from 3 back to the 5. The algorithm loves the 5-minute chart. So like I want you to like between these lower, I'll say 1 to 5-minute time frame. I just want you to watch the actual speed of the candles. Like just watch how energetic they are to do something. So for example, if you're looking for this to go down and you want to verify that this is not really just a, little, you know, 1, 2 down and back up, you really want these things to be energetic. You want these things to be non-lethargic, big body candles, right? So notice this, boom, trending upward. This is telling you, hey, I'm having trouble going higher. Hey, I'm having trouble going higher. It's making lower lows. And reminder, where do we take our first trade? And I said it like this before. Once you get good at this, you can come directly down to the minute and do it. But if you really need to practice, you need to practice. So I'm telling you that right now. Don't be like AI, right? We talking about practice? Come on, man. We talking about practice? Yes, we're talking about practice, my guy. And it's funny because it's a perfect time to light the blunt of you real quick. Because like some of the stuff that we talk about on this channel, right? We talk about trading. Um, every single day you are met with things that are consistent and the same. The algorithm is going to offer you the same structures a lot of times. It's up to you to break these down and say, damn, that was it. Not say that. I'm watching the X Games. I'm sorry. You need to come in and say, you know what? Wow, I can see this root candle. And the reason why I put this line here is what? You have one candle here breaking a low, but we're not trusting the first one. We need this to really tell us it's having trouble breaking. So when we get these, I told you before, two candles similar to something like this is the wrong time, but similar to this, right? This one is a really, really nice one. And like I said before, once you get comfortable with this, you can play and scout with this in other areas. But I want you to really come in inside of a kill zone, inside of a algorithmic uh idea that you can use that that works every day, right? For example, do you see how this is slightly different, but it'll give us a similar result, but you have to practice this. I'm looking for the speed of these candles. So notice how when this goes up again, right? Root candles here, I get more than one. These are relative equal highs. Obviously, if you're scalping, you know that this is going to get taken again in liquidity, especially failure to get down here to this low specifically. All you know that this is all liquidity in this area. All this is not going to let you stay long term. You need to understand that, yo. And like I said, I can see smaller objectives. I can see midterm objectives. I can see longer term objectives. And it's not just based on time frame. Okay. But what I'm understanding is, watch. Notice when these candles smack down, right? You get a blue candle, white candle, two top wicks. This one breaks down. You have a white candle, and the second one is what breaks this low. You could take the sell move here if you're scalping. Directly when this candle breaks this low, and this wick is already in place. And so what I'm looking for is now, like I said, speed. I'm looking for how energetic the reversal is. I'm also looking for the open high low close or the open low high close of the candle itself. Once we get down to the 1 minute in a little bit, you'll see exactly what I mean about watching for the vibe. And I'll say that a lot. So now, real quick, I need you to understand something. When I talk about open high low close or OLHC or whatever, which one you want to name it, right? We're talking about the formation of the candle, right? In general, these have a specific order. So when we're looking at a bullish versus a bearish candle, you can actually time it out and figure out how it's going to actually close. So if these are all 5 minutes in duration, right? 60 seconds times 5. So, okay, cool. That means in that 5 minutes, I only have but so much time to, let's say this is a bearish candle, right? Same thing here. It only has but so much time to open at the top of the body, right? Form a top wick, okay? So it's going up first, causes the wick, and then it starts expanding lower, causing it to range expand, which is the making of the body. And then you make a bottom wick. It makes a low, comes up just slightly, and it closes. And your next candle opens. Every single time frame. It's not a time frame of a specific thing. Every candle does that, obviously. So when I'm talking about it like that, that's what gets me to look for this inside of my root candle. I'm looking for the formation of the candle to be bearish. So these, you can see this opens and goes low first, starts to create a blue body and goes higher. You know damn well that is not the fucking candle. You know damn well. You don't sell that candle yet. You wait. Now, next candle opens. This is a little different from what I'm looking at here for a reason. Now watch. This is a lot easier because you have already a candle that opens, top wick, it expands down. This one takes the low of the previous and you go down, respectful of the previous high. That one's easy. Good attempt. Even if it doesn't work, you're able to protect yourself at this high or this one. That's fine. Your next candle expands down perfectly. Great scout. You're looking for this. If you don't get it, you get out around here, obviously, right? So my thing is, when you're looking for some of these things, I am looking for the open, high, low, close, or the formation of the actual candle. And let's give this some context. So if this was now I actually have like multiple tabs open. So I have like different color candles on different tabs. Like this one still has blue and white. My other ones are purple and green. I'm so used to purple that I might change it on this one too. But what I'm saying is if this is a white candle, right? And you have your wick, top wick like that. Now, this candle and this candle are similar. My thing is, do you see what I said before, right? Why this is important? Now let's keep this or whatever. That's fine. And we'll chop this up. Keep them. All right. So my thing is, right? You're taking the trade. And again, I don't trade from the 5 minute, I trade from the 1 minute. But what I'm telling you to do is you can wait for 2 5-minute candles. If you want to get in a little earlier, you can go down to the 1 minute and it'll get you in a lot faster. Okay. And a lot higher too. I mean, this is a lot of space that, a lot of people like to waste trying to figure out if this thing is really going to go down. But my thing is, you already have the context. So I told you before, 2 candles in a row, your direction is a lot better normally. But what I'm saying is, in this example here, we understand the turtle soup as well. So when we have these lows, or my bad, highs already mitigated. My bad, I'm stoned, bro. Give me a second. All right. So when you say, all right, turtle's already forming, it's time for me to plan my attack. So I understand that it's going to give me a run for the liquidity on the buy side. Once it starts to break down, right, and we're going to go to the 1 minute in a second. But what I'm saying is, in your practice, you're going to use 2 bearish candles in a row. You can get used to the blue candle or up candle to the down candle situation and basically taking it right here. Now, the 5-minute perspective looks like this. And we're going to separate these lines by color. So let's do it with a yellow one. All right. So right here is your turtle soup. And we're just going to drag this over. This is your 5-minute, what we call the range runner, right? So 2 consecutive candles. And you're getting in right as this candle starts to expand lower. And you already have the top wick in. So when this candle starts to range expand, you already know it's not going to stop. 5 minutes, it's not going to stop. So you're going to see where you are at the end of this 5 minutes. And you wanted to retrace. You wanted to. You don't even really want to smack this down too quickly. What do I mean by that? You want this to basically retrace and give you these little small wicks at first, or huge wicks at first. You're already in the trade. This is validating your direction. So you're not going to be scared that this is giving you like a vibe of, oh, maybe it's reversing on me. It's not. Guarantee you. Retracement and a reversal are different. This is not threatening you if you're in here or somewhere up here. This little retracement's not going to threaten you. And even if it does, when you're in at my orange line, you still wouldn't be super in massive drawdown. So do not be trigger happy trying to get in, out, trying to be perfect with your entry hack. Okay? Trust yourself, trust the trade, trust the algorithm, and trust liquidity because you understand liquidity is not going to get ignored. All right? Now, mind you, I've said this before. This is the scalp to the buy move. So, us talking about this 5 minute structure. Watch this now. Let's drag this thing down. Okay. Yep. I give it to you long style because you need these types of setups. You need these types of explanations. So again, if you don't like the long video style, watch it like a TV series. Take 2, 3 days to watch the same episode. Be creative. But either way, I'm walking you through the entire process. We're not going to have a stone untouched here. So watch. This is interesting now, isn't it? 2 minute. Now, why am I looking at the 2 minute? It's clean. I've said this before about the 1 minute, where the 1 minute is where I execute 1, 2 to 3 minute. But I really like the two because it validates how um, strong your 1 minute candles are, obviously. So when you have two of these creating a range runner, right? Get creative. And look at these. Look at these. Oh, man. You could take the trade here. Let's zoom in. Now, look at these. These are all beautiful areas to take trades. Now, you've seen the 5 minute chart. You're on a 3, 2, 1 minute chart, right? These are going to be some of your best entries. This right here is your root candle, right? You have a huge one. You can refine it to the top candle, okay? And notice how all the ones to our left are not touching that. When you see all these here, right? And you might think to yourself, all right, rejection block style, right? Rejection block style. You want to do it like that. And you go down, up, down, creating more sell side liquidity here. And again, when you understand how to select and avoid, I'll get a lot of questions and say, well, Jay, you're not worried about that fair value gap or that fair value gap or that fair value gap? No, I'm not. Because price is sell side. That's nothing but liquidity down there. It's going to disrespect all these fair value gaps. That's the difference between coming in and thinking that we're just basic ICT traders. No, we fucking understand market structure, bro. The most basic people, what they do is they'll find out what the fair value gap looks like, think that they have it down, and just start taking every fucking fair value gap that you see. No, not gonna fucking work. This one works to go bullish. Yes, nice one. Sure. But what I'm saying is, without context, you're going to get smacked by this downside and not understand why. Anyway, so when we're talking about the entry drills here, right? Look, 2 candles in a row. Boom. Take that on this candle. And look at this. fair value gap, bearish breaker. Breaker fair value gap is the highest probability of your direction in the marketplace. These are the best setups. And also, if we really want to be hype about it, inverse fair value gap, there's another entry here for the inverse. You go down, back up, taps this fair value gap. This becomes a IFVG. So you can mark it like this, obviously. Let's choose an interesting color, purple. So right here, you get down, up, making this an inverse fair value gap. And then this is how you know these are definitely going to get disrespected if you weren't sure about that before. And again, you have targets, right? Now, to go long, now before we get to the buying, just really quick, I just want to show you the 1 minute time frame, right? But just really quick, let me take these off so you can see. Do you see what I mean? You have nothing but clean structure. So hook candle, my bad, hook or root candle is what you can call it. This one does take this low, but like I said before, this is why I like 2 white ones in a row. You easily can get like a small retracement. This could easily obviously be an order block, right? The way you're looking at it. Down close candle takes this up one here at a resistance. You go down, it goes right back into this order block candle respects the wick, not necessarily the order block high. The mean threshold is a little slightly pushed for a second, but the rejection block does a bang up job if you want to look at it that way. But I mean, still, we could come in with go back levels and even don't really have to. I mean, just for the sake, right? I mean, hey, um, yeah, we don't even need to go back levels for that. Doesn't matter. But what I care about more is I care about how you're looking to um, take your trades. You need to get in when the move starts. When you're trading futures, bro, you don't have a lot of margin for error. Why? And this is my point. Let's say you were bullish, right? Let's say we got that, bro. We get it. All right. Liquidity's taken on the sell side. Right. Now, mind you, this is what a lot of people do, bro. And I don't want you doing this. It makes no fucking sense in reality. They tell you that, hey, you should take a trade. You should come in and let's say you're long. Let's say you think that the turtle soup is whatever, right? Let's say you see the sell side liquidity from London get taken. So as soon as it gets down there, you're buying on impact, you're setting it up, and you're on the 2 minute, 1 minute, and you got liquidity, right? So perfect if we're talking about structure, right? I'll be honest, this is a nice liquidity pool, right? Yeah, perfect. But this is my point, right? And let me oh, I got vitamin water, I got regular water, I got Gatorade, I got everything. Hmm. Bro, my house is like a fucking store. I got like unlimited backwoods. We got unlimited water. We got unlimited snacks. We got all types of noodles from different places that I like to shop from. And I'm just hyped right now that like you know, it wasn't always like this, but you have to trust yourself and trust your trading. I'm telling you now, you put in the work and your life will be how you want it. I'm telling you, man. And like these are some of the more simple setups. And again, once you get used to some of these things, it's not about like not saying it like that, but when you understand the marketplace like I do, we're not trying to go for no 1-to-1, bro. We're not trading no 1-to-1s here. If we're really being honest, and I have a separate video I want to do for this, but when we're talking about risk and you really understand what the marketplace is doing 9 times out of 10, I need you to come in and really run that 1-to-5, 1-to-10, 1-to-20. You know what I mean? It's really not difficult. Higher RR in the marketplace just comes from you understanding what's happening, instead of you coming in and framing uh, a low risk setup or a high risk setup and capping yourself on how much you think you can make. Don't cap yourself. Just understand liquidity and understand the range that's given to you and use that. So I'm only using the low hanging fruit, and I'm gonna show you about this turtle, right? But this is my point about this, right? Is when you're looking for setups, don't be this guy here. Don't do it, or girl. Don't be this person where you see all this here and you see obviously price darts down toward the liquidity. You're good at turtle soup, just like I am. You understand that you want to be a buyer underneath the old low. That's the whole concept. We get that. And so when a session takes out one, this is a great area to start looking, and you're not wrong. But the problem is, do you see how we're going to measure this, right? So if you're not patient, this motherfucker runs almost 200 ticks, my guy. 200 fucking ticks. And let's say you're coming up here, you're like, all right, well, we're in this low. I'm just gonna pop in. Let's say give this about 60 ticks. So you give it like 63 ticks. I'm just role playing as like, any amateur or beginner that might come in and have ideas, right? So they understand. They might watch the video like, hey, you know what? I understand you buy under these old lows and you sell above old highs. I get that. There's liquidity here, and so on and so forth, liquidity pool. But the problem is, right? We talked about this where a lot of people go through this, and it's not even like your idea is wrong. It's just that you're a little too early and you're a little too overhyped, right? So I need you to chill and understand that when you're looking at the structure, and that's why I brought up, remember, I tie everything else and we go full circle with these lectures. The OHLC of the candle. Really look at these things, and you're on a 2 minute, so you know they're not taking very long for you to watch how they form. So when you see all of this here, you get it. But even on this candle here and this candle here, there's two more white candles in a row. You can't buy that yet. Why? What's the point of doing that? You know what I'm saying? You're just going to go into massive drawdown, get anxious, get upset, start closing trades. You probably went a little heavier than you probably should have anyway because you thought you saw something, and you did. But my thing is, damn, that 50-50 was sick. But when you're looking at like this structure here, you need to wait, my guy. Now watch. Let me drill this down to a 1 minute, and I'm going to show you some cool shit. Now let's really talk about it. All right. Now again, I haven't been on the 1 minute until now, right? Until like towards the end of the video, right? Now I'm doing this on purpose because I talk about like not just my style, but why we like the fucking 1 minute in general, bro. It's fucking clean. And when we're talking about some of these things, the lower the time frame, the better, because you're looking to fucking nail it, straight nail it. You know what I'm saying? So this is what I need you to try and peep. All right, what time is it? Oh, it's like 1 o'clock in the morning. Okay. Well, I don't trade Mondays anyway, so I'm not trading London. I mean, I could scalp it, but I'm not really interested. So, long story short, look at the 1 minute. All right. Now watch. I'm gonna get rid of all this bull crap so you can actually see it. All right. Now watch. If you are here, okay, this is the low, and look at these candles, bro. Look how consistent they are. Now, people do this all the time. They'll see it and be like, all right, cool, I like the level, I like the area, whatever, whatever. I'm just gonna start buying shit. Why? Bro, why? I don't get it. Look at these. Look. Now break these down one at a time. High, you get the open, high, range expansion, low, close. Open, high, range expansion, low, close. Okay, I can't buy this yet. These are bearish candles. And if these are only 60 seconds in duration, you can see this. Mind you, when I'm looking at something like this, and I'm gonna take this one instead. This might be open, 20 to 30 seconds downward, another 30 seconds of range expansion to the downside. Or you see how ticks move. So how often do you see price just hover for a second right at the open? It'll go up for a second and it'll be speedy towards the downside. These are non lethargic candles. Do you feel what I'm saying? And so they're smacking down this far, this fast. And so when you're watching that, you're like, okay, no, I'm not doing that yet. I know what I need to do, but I need to wait. And that's what I want you to do. Now, what do you get in here that makes this 10 times easier? And I want to keep one thing on the screen. So we're going to lock this and we're going to do, okay. Now watch. This is way different. Even for a second, bro, it just stops. It's as kindergarten as you can make it. It stops right here. Give yourself the root candle. Okay, this is the first blue candle on the 1 minute where I'm expecting a turtle soup. Got it. Okay. So when I see this next candle, this one is beautiful in structure because you have the first candle that stops it completely, becoming your root. And the next candle is a nice, nice body. But you've already experienced all of this that you were able to avoid. You're not taking your buys here. You're waiting until you get something that's a tangible, consistent, anxiety lowering structure like this. Damn, he nollie front boarded the fuck out of that rail. That was crazy. Now look, you get two in a row. If you needed a third one to verify it, also you saw how it looked on the 5 minute. It was really, really sharp, wasn't it? It was like one big candle down and the next one was huge. But that's why you go to the 1 minute, bro. You could break that down. You don't have to wait till the candle's all the way up here and start looking for fucking entries. I mean, like you don't have to be here look for fucking entries. Like you're already in, bro. And look, you're getting in right when the 9:45, 9:46, you're going into the macro at 9:50, which is up here. And you're before the macro even. Beautiful. And the time is good. And look, this is where you can pyramid. You can pyramid all in this area. So maybe one and you try it out. One contract. Okay. Just chill for a second. One contract. Get your second one. You understand what's happening. Yeah, you can get it again. You can get in again. Now it's first in and first out, so you don't want to be playing around in out, you know what I mean? It's gonna lower your average cost. So you don't want to do that. So you want to just be definitive in your ideas, right? Like we said, we had liquidity, right? But that's the main thing. I need you to understand. If it's bullish, it's going to respect bullish PD rates as well. So you're not going to come in and be like dumb confused that price is like making sell side candles still. It's going to do that. But it's not going to be going downward to where it's just going to smack everything and take it out. No, you're bullish now. Okay. You see? But that's my point. You're coming in at a logical area. We talked about it being above Asia for your first move. And again, we talk about this is one objective, this is a second objective. You have to understand the marketplace and what it's doing, not just for profits, but what I'm saying is, why is price going down right now? Why is price going up after that? It came down to take the sell side version of liquidity from the equal lows in London and Asia to then go bullish from your entry hack where you could have gotten in one and then your second contract. Not promoting super risk, so you want to keep your risk low. Okay. Bro, you don't need much to pass any funded challenge. You telling me you can't pass a funded challenge here? Why not? Why not? Why not? You tell me. How many ticks is that? We're just hanging out at this point, but like what how many let's see if you grab it in between, let's be moderate. Like in between, right? Right to sell side. No, my bad. Right to the first buy side liquidity, which is located, look at that. And that's only the first one, bro. And we have higher objectives, I'm sure, too, because we could have popped on our gold back levels, right? And let's go. But I'm curious. Let's go replay mode. Like what's the target here? We would have been able to see exactly where we're aimed at. So let's open up the range. Oh, dude, look at that. Oh yeah, no. So that means we're right here, and look at that. You know exactly that this is a perfect stop run. We talked about the turtle soup, but on your gold back levels, this makes a lot of sense, right? So here, and we're looking for higher objectives. So we would at least had EQ, which is 700-ish, almost 800 ticks. And so let's see if we put it to the high of the dealing range. So the high of the 243. So this is 1200 ticks. Do you get that from down here? Let's check. So I'm just gonna play a few of these out. Now you see how it plays around EQ. Might bother you a little bit. Let's do let's 3x this bitch. And so going a little quicker, I want you to watch this though. I'm not trying to go too fast so you can see the price action. So you have buy side liquidity here, right? So come down. Now let's see if it takes it out. Now EQ is the first major target. But let's see if we can get back up here. Now PM session, I mean obviously it's only but so much range it's going to give on PM, right? So here you had gaps, back to EQ. And like I said, you had buy side liquidity here. Liquidity void, right? Okay. Breakers and mitigation block. So it's going to be all like choppy-ish, right? It's going to do all this up and down shit. Yeah. Now watch when it breaks out of this. All right. And like I said, it's annoying. See? But again, we got liquidity located here. So we're going to drag that over. All right. So there you go. Boom. Buy side liquidity taken from the first panel. All this buy side from these liquidity pools here. Cause more buy side again. Now watch. Now here we go. Now this is a little after 5 o'clock, 4 o'clock. So if we're talking about practice, no, I'm kidding. We're talking about range, right? I've been watching a lot of like NBA videos on YouTube about like Allen Iverson and shit, because he was like one of my favorite players. But um, I talk about sports, um, and I think it's so motivating, bro, because I have a Kobe mentality towards like my trading and even my skateboarding. And so like these are the things that I like to do. These are my two favorites. And so I like to apply these ways of thinking to my trading, bro. Come in and be the best, my guy. And so, like I said, if we're looking for certain targets, right, and I guarantee you that this ends up getting smacked. But my thing is, right, now watch. Let's see. I just want to 10x this real quick and watch this. Now, this is the Wednesday. But long story short, um, the range here is good. So this right here would have offered you, we would have been able to try and go for those 1200. But if you're only offered that, what, about, now let's look at the time. You're offered roughly 900, a little over 900, bro. If you got in a little lower, it would have been a rack. But yeah, bro, you tell me you can't pass a funded challenge? Why not? It really takes one trade, I'll be honest. It's not difficult. You don't do it on the first try, you do it on the second try. All you gotta do is hold the trade. I think a lot of people in futures glorify like the super scalping and all of that. I'm not saying you can't scalp, but my version of scalping is you try to take something like this. I'm not trying to go for no small amount of ticks. All right. Now, if you're just kind of like, you know, practicing your scalping, that's one thing. But if you're trying to get something done in the marketplace, bro, stop wasting your time on these funding challenges. Get done, bro. Get done. Look at that. 600 plus ticks, bro. Be done. You telling me you can't max out? You understand the range. You can go and look at sell side liquidity and know that you're underneath sell side liquidity, you're gonna you can either do it with the power of three number, but once liquidity is attacked, don't immediately get out. Take something and leave a runner, just so you can capture some of these higher you know ranges to your trade. We're gonna talk more about entry hacks on our last part coming up. It'll be more towards how to use it with um, PD arrays, so like higher time frame PD arrays, how to do it on the high time frame in general, how to come in and now obviously this is on like an EXT level, so this one's easy to dominate, and mixing in other algorithmic concepts to then engineer better entry hacks like this. So like, where in the fair value gap can I focus on? It's probably going to be somewhere on your dealing range you might want to focus on. And so even if it's a smaller dealing range, I guarantee you that this is a fair value gap level. It's fire level, bro. Look, let's drag it down. But what I'm saying is, I need you to come in and just be better at understanding where your opportunities lie. So, oh, look at that. This is a breaker. Oh, yeah, yeah, yeah. It's a breaker. See, that's why it's important to use go back levels, because somebody might have just focused on the gap when in reality it's just a bullish breaker. And you can see it because you're like fair value gap, liquidity void, and then you got your breaker level. And this whole part here is what it was aimed at. So it goes up, down, back up, down, up. But the funny part is, however you look at it, right? Watch. Look. So I go here, right? See it like that. But a lot of people get uncomfortable with these. But we're going to talk more about half shifting as well. Half shifting is not very difficult to use in a practical way. And so, like I said, where people just don't understand exactly like how to shift it or like why to shift it. And so they say, Jay, I thought that was like, you don't want to be a buyer in a premium. You don't. But you have to also understand when to shift it. And so, what is this? Watch. What did I say? I guarantee you this is in a fair value level. Now, why did I know that? Obviously, not just because the gap worked. Half shift. And for the sake of the study, we're on this number. But what I'm saying is when we get to half shifting, there's more information on this in the Discord, but I'll give a basic version of why or why not. To half shift or not half shift is the question, right? But as you can see, it aligns very nicely. Very easy that you can use like that. And here you go. You got your breakers here. Another breaker here still. But it's all, I'll say this a million times a day. Marketplace fractal as fuck. It's fractal as shit. It's cool. And look at these reaction points. They're so good. Every time you see something like no stone is unturned when I'm explaining something. So hopefully you guys found some more insight to the entry hack. Okay. We'll talk in our next video. All right. Man, that was fun.